Good afternoon and welcome to the Digital Transformation in Banking, the Formula webinar with Juniper Research and Gemalto. My name is Dr. Windsor Holden. I'm the Head of Forecasting and Consultancy at Juniper, and I'll be moderating the session today along with our expert panel of presenters, Nitin Bas from Juniper Research and Cecile Urengen from Gemalto. Welcome to Cecile and Nitin. Here is our agenda for today's webinar. Cecile and Nitin will be presenting a set of slides looking into the digital banking market status, the factors driving a successful digital transformation, and a roadmap for the same. We will conclude the webinar with a set of strategic recommendations for traditional banks as well as for the new and emerging digital players. Towards the end of the webinar, we'll be taking some questions from the audience, and we will try and accommodate as many as possible today. Now over to Nitin to provide a brief overview of the digital banking sector today and tomorrow.
Great, thank you, Windsor, and good afternoon all. Right, so multi-channel and cross-channel strategies are in fact all news now. We are now in the age of omni-channel banking with vendors and financial institutions increasingly adopting and enabling an omni-channel banking strategy, i.e. providing a seamless and integrated experience across multiple individual channels. For example, across in-branch, phone, mobile, online, and now we have wearables. So in a banking environment, it provides a consistent and closer experience to the user across online, mobile, and in-branch channels to the user. As has been evident over the past few years, instead of just simply using a physical channel such as the bank branch, customers have adopted and used online banking and payments, which has significantly augmented the consumer journey that, if you recall, a few years ago started with just a physical branch. But one corollary of this is that as usage migrates to online and digital-only channels, the number of physical branches is in fact declining in many developed markets. Of course, in some emerging markets like India and China, it's in fact increasing. This is what the chart shows. Now, let's look at the digital banking market from a user perspective. What the market, the slide to the chart to the left looks at where we are at the moment. As our previous slide suggested, from a device point of view or usage point of view, the digital shift is now quite understandably focused on mobile and wearables like smart watches, for example. But at the same time, it's safe to assume that channel preferences amongst consumers are evolving from a mobile-first approach to a mobile-only approach in most markets, in many markets. In fact, according to Juniper's latest data, we found that the number of mobile banking users reached 1 billion for the first time in December 2015. And it is worth noting that in emerging markets, as I mentioned earlier, especially in India and China, there has been a significant shift in the banking preferences of consumers. In fact, according to Citibank, 95% of its Chinese customers now choose to use banking services online rather than visiting a branch, for example. Now, digital transformation, or rather digital enablement of services in retail banking is happening now, not just in developed markets, but in emerging markets as well. But what we can see is that innovative banks are increasingly investing in or partnering with fintech companies to establish the next generation value-sharing business environment. And the key target market for these banks and the financial institutions are the millennials, the Gen Y customers. So moving on to the consumer side of things, we believe that it is essential that the customer's first digital experience, with a bank is positive. And quite understandably, enterprises, including banks and other financial institutions, which fail to meet these expectations, they risk alienating a demographic which will form an increasingly large proportion of their potential customer base. And equally, the customers, the Gen Y or the so-called millennials, they are attracted to banks that offer innovative and exciting new services. And at the same time, if you look from the bank's perspective, banks are eager to capture customers early and achieve some sort of lock-in. The ability to offer cutting-edge banking applications and services is also a way for banks to secure customer loyalty and also to increase customer satisfaction. In fact, I would like to mention one of our recent surveys. Juniper conducted a survey in Q2 2016 which found that banks will in fact witness a serious setback if they do not offer appealing products and services. Perhaps that's an unsurprising finding, but when we conducted the survey in the UK, we found that 1 in 3 UK mobile banking users indicated that they would in fact consider changing their banks in the event of a poor mobile banking experience. And the fact that you have a current account switch service in the UK makes it much easier for them to change banks. In fact, over 3 million banking users in the UK has already switched their current accounts in the UK. So it is becoming more and more clear that banks need to stay a step ahead in order to innovate and maintain their competitive edge or risk losing their customers. Now, moving on to the next slide, we're going to look at the rise of the so-called digital banks or the challenger banks. So driven by the emergence of tech challenger banks, the financial sector is set to witness increased, or in fact is already witnessing increased disruption from technology-first players. And this is primarily driven by two main factors. One, these smaller digital-only banks, they are capable of delivering bigger returns compared to the larger traditional players. And the second factor being, if you go back a few years, receiving a banking license used to be a really hard process in the past. But in recognizing the benefits of especially mobile-based financial services, governments and central banks, they are demonstrating improved flexibility and are now aggressively developing new branchless and mobile banking regulations to facilitate easy entrance for newcomers, especially digital-only players. And it's also worth observing that the new entrants, they have a much more focused, nuanced approach to the financial sector than the traditional providers. They often have products that are tailor-made to the customer's specific requirements. But at the same time, we would highlight the fact that having a mobile or digital-only strategy is too restrictive. In fact, according to our survey that I mentioned earlier, a notable proportion, in fact 22% of the UK non-mobile banking users, they in fact do not trust online services to manage their money. So the challenge for these so-called digital banks or challenge banks is to achieve critical mass without relying on numerous partners, and to survive in a fast-growing and fiercely competitive market. Digital banks need to continue to innovate their products and services and also keep their overhead costs to minimum. Now, let's look at the scale of fintech development. What's happening in the fintech sector? While you could say that it took around 100 years to bank 1 billion individuals through traditional means, the acceleration in digital banking and technology could in fact result in a further 1 billion individuals being added in less than 10 years. So banks therefore needs to understand the risk of supporting and investing in platform-based business models, which is what we will, we'll come to those slides in a minute. And it's simply evident that banks need to let go of traditional practices and legacy systems and embrace new technologies and business models. In fact, if you look at the scale of venture capital investment that has gone into the fintech space, it's grown sharply over the past 2 years, totaling nearly 14 billion globally in 2015. And one of the key opportunities for banks is the ability to mine large volumes of data to analyze consumer behavior by implementing customer analytics platforms. You know, we've talked about customer analytics quite a lot of times. You know, it's been spoken about in the past. It just means better and targeted marketing to up and cross-sell products and services. But given the scale of data involved here, it is not surprising that artificial intelligence and machine learning is expected to play a key role in fintech development. Another thing that's worth mentioning is the investment into blockchain. We all know the advantages of blockchain. You know, it offers combination of transparency, and the fact that it offers traceability has attracted the attention of a number of leading banks. In fact, Fido, German online bank Fido, they became the first bank to use the Ripple payment protocol, allowing its customers to instantly send money in any currency, in any amount, through the bank's money transfer protocol. Another thing that's worth observing is biometric authentication. There's increased reliance on biometrics. Indeed, you know, people like MasterCard, they have launched a selfie-based authentication as well. But we believe fingerprint authentication is what is expected to have the greatest growth in terms of consumer adoption, in terms of number of apps that will be used, including banking and payment apps, over the next few years. So, just to summarize, what we think, you know, we think that there are a number of options for consumers right now. That's being enabled by technology. And what this means is that traditional banks and financial institutions have essentially two main challenges. One is digital enablement through fintech investments, through innovative products, through innovative service offerings, and the second one is the digital transformation. When we say digital transformation, we are not just talking in terms of technology, but in terms of business models, banking processes, your employees, etc. Now, Cecile will now discuss more about digital transformation in banking, including the critical enablers of a successful digital banking transformation strategy. Right, over to you, Cecile.
Thank you, Nitin, and good afternoon to everybody. Thank you for this very clear overview of this digital transformation in the banking market. And let's jump now on what would be the success factors and future roadmap. What is the formula to achieve this digital transformation? Now we've seen that the actors are facing the different trends, challenges, but also opportunities with Nitin, and these actors have for us 4 main success factors that will help them to thrive in this digital transformation. The first one that will make the difference is the engagement with the customers through their digital journey, and this in a convenient way. The second, streamline performance and ensure cost saving and efficiency will be very important. The third one is that in everything they do, they must ensure trust and provide security in the digital bank. And finally, is to keep pace with innovation and technology, to stay ahead and make sure that they drive new revenue stream. So moving on to the next slide, to dive into those 4 success factors. We've definitely entered the era of the consumer, not only for banking, but for every type of business. It's now a data-driven, app-powered, hyper-connected world where consumer experience rapidly determines winners and losers, where new markets and new competitors can appear almost overnight, and where established practices and processes are constantly challenged. So digitizing the consumer journey from enrollment to engagement is key, and for the players, the banking players, it means offering a consistent contextual experience, and this across multiple channels, but also offering smooth, fast and safe, and also providing this instant experience when they enroll, when they register. Make sure they identify the importance of offering personalized and customized experience for consumer, evolving the decision-making process to simplify consumer engagement across all channels, and lastly, being socially engaged with the consumers throughout the customer journey, and this based on real-time behavior. This will be crucial to succeed. Moving on to the second success factor, so shifting this consumer experience and behavior, bringing convenience, value, it means for the banks that they need to adopt a long-term commitment to financial technology. And how to commit to this financial technology? What we think is that the solution goes through open API flexible platform that enable fast future innovation. Indeed, what do fast-growing companies like, and all of you know them, like Uber, Airbnb, Amazon, and Deliveroo, all what they have in common? They're all open, flexible, platform-based. Deliveroo delivers food but doesn't make it. Uber is the world's largest taxi firm but does not own any taxis. Airbnb is one of the world's largest accommodation provider but owns no accommodation. These platforms have quickly grown to become giant in their fields because they're able to welcome, to test, and to disable very quickly new technology, new services, bright partners, and enabling for that this what we call this at-a-wad experience, so this anytime, anywhere, any device experience that today all customer request. And when we think about technology in banking, it means blockchain, cloud, artificial intelligence. So why not banks adopting this way of performing their business? Jumping on the third success factor, building trust. As banking activities increasingly migrate to a digital environment, so too does fraud. And you have here two main insights. Online fraud detection spent will hit $9.2 billion by 2020 as fraudsters target mobile transactions. And Juniper forecasts over 16,000 data breaches per year by 2020, on which under 10,000 will be reported. So at present, financial cybercrime accounts for the majority of cyber attacks, as there is definitely an obvious monetary gain for attackers in breaching financial system. Banks and payment players, the traditional one, the new one, dealing with the money of people or from companies, they have no choice than putting the security and trust at the center of their strategy. And in addition to this digital impact on security, the change in regulation all over the world also impacts banks and payment players. For example, in Europe, the PSD2, these regulatory reforms means that not only do banks need to comply with the regulation, they also need to make changes to their existing business models, services, and financial products to adapt. And finally, the fourth success factor, how to stay ahead. We've seen it, technology is a differentiator for all types of banks, from traditional to new challenger. Customer experience is crucial, but to stay ahead, all those actors need to target every aspect of the business, from product, people to process, and as early as possible. And starting with product, what we mean is that they need to make sure that any new product or platforms give them the competitive edge in a fast, disrupted market, and that the platform provides scope for future innovation. Regarding people, redesigning the business model with customer, really reinventing the customer journey, changing employees' mindset, bringing the digitalization of the way of working. It's very important. Regarding process, making sure the whole transformation process is seamless, structured and successful, but at the same time accept disruptive ideas from challengers and be flexible to the new business model. And now on your side, how far have you come in this digital transformation? To test yourself, we have developed an assessment tool, so you will see it's short, it's fun, and it's available on our website. So test yourself by following the link that you will find at the end of this presentation. Really, it's worth a try. So now moving on to our recommendation. Digital transformation in banking has only recently begun, and it will definitely not end with mobile or wearables or having a cloud strategy. The opportunities are endless. It goes through all these components that we've seen: smooth, valuable customer experience, innovative business model, open API platforms, strong security strategy, digitalized employees, change the mindset, and adapt to new regulation. So now let's see concretely with Nitin, what are our key recommendations for each of the players? Nitin, the stage is yours.
Thank you, Cecile. Right, so what we've done is we've split this set of recommendations that we have compiled after our recent study into digital transformation in banking. We've split those recommendations into three main groups. So we'll be looking at the recommendations for traditional banks. We'll be looking at recommendations for the digital players. We'll also be looking at some key strategic recommendations for the payment innovators, or the so-called challengers. Right, for the traditional bank, firstly, what needs to be done is an objective needs to be identified. So you need to be looking at digital transformation of processes, or do you want to be looking at digital transformation of customers, or even technology platforms? A clear migration plan with a long-term innovation map is critical while transforming a banking business. Traditional banks reliant on legacy practices and systems, they need to transform their business quickly, or as we mentioned earlier, risk losing customers and a significant proportion of their business to other players, whether they are the more agile and established banks or new challenger banks. Now, the advantage of smaller banks is that they can especially profit from the provision of digital banking to allow them to differentiate themselves in a competitive marketplace. But reinforced by an improved financial regulation, not just across the developed markets, but also across developing markets, interoperability between all ecosystem players is essential to reach the broadest consumer base and drive future innovation. This means selecting the ideal partner for the digital transformation process. We would also recommend that banks not just focus on the back end, but also on consumer-facing front end, which means investing in and implementing automation solutions to reduce cost, workforce management time, and customer onboarding time. Now, if you look at the recommendations for digital and mobile-only banks and payment, the key thing here is partnership. Partnerships are key for digital-only banks. Cross-industry partnerships, it helps banks, the smaller players, to leverage specific technological expertise to enhance their ability to provide consistently attractive services or business models. The second main thing that we would point out is the need to focus on flexibility. Technology is evolving so fast, we all know that. You can in fact see new financial technologies emerging every 6 to 12 months, or perhaps even earlier. So it is essential to consider future-proofing a service to reflect this. Now, summarizing the recommendations for challengers and payment innovators, we've all seen retailers becoming bank. We've seen, for example, in the UK, we've seen Tesco's, the likes of Tesco's, Sainsbury's, they've all become a bank. The question is, can tech companies be the next bank? While the likes of the GAFA group, or the Google, Facebook, Amazon, Apple, alongside other key players like PayPal, Square, they will not essentially replace your bank, but they will be able to take customers away from traditional banks by offering a range of comparable services. But the biggest hurdle for these players is, once again, regulation. they may require one or more partners in the banking ecosystem if they are to further expand away from just payments or just P2P transfer or some other functionalities. And the second thing is security. While we think solutions and services on the market are thoroughly tested and proven before launch, the ability to provide security and educating customers about it needs to be in the forefront of their digital strategy.
Right, that now brings us to the end of the webinar. We do have time to take a few questions, however, unfortunately, due to time constraints, we are not able to answer all of them. However, we would encourage our listeners to download the white paper and to email us with any related queries so that we can dedicate enough time to all your questions. So we've got time for a couple of questions. So firstly, we have one on technology. How can banks use technology and innovation to offer better and cost-efficient customer services? Cecile, why don't you take this one?
Yes, thank you, Winslow. Yeah, how can banks use technology and innovation and for the best for the consumer? I think that I will come back on this idea of open API platform that enable to really put in place an environment where partnership will become absolutely key between all the actors, and because we think that it will bring the best of both worlds. It means that from traditional player, trust, security, regulation, compliancy, and on the other side, from a new challenger, new digital player, agility and innovation, very customer-centric oriented. So, definitely for us, really, the innovation, the technology, and this for the better for the customer and the consumer will go through those open API platform and
Great.
partnership.
Yeah. Thank you very much, Cecile. Now we've got another question on future-proofing. How can we future-proof the banking sector? Nitin, maybe you could take this one.
Right. Okay. I think Cecile did touch upon this during her slides. But yes, to future-proof the banking sector, I think it's fair to say that banks and financial institutions they are facing significant challenges. You know, not just in terms of competition, but also in terms of regulations and customer demand. You know, because consumer demand is never ending. You know, they want more and more. So they're facing quite a lot of challenges. But I think banks and financial institutions, especially the traditional players, they need to take a long-term view. They need to take a step back and think beyond just market share. I think the focus should be on improving their customer focus strategies. The focus should be on an accelerated time to market, lowering operating costs, and an enhanced view into key business data, and developing a much more rapid response to regulatory changes. Going forward, I think competition and differentiation of their products and service offering is going to be the key factors in future-proofing their challenges, future-proofing their offerings. Sorry.
That's absolutely great, Nitin. Thank you for that. Now that brings us to the end of this webinar. You can download the white paper from Gemalto's website. The link is provided in the webinar webpage and in the email. We hope you've enjoyed the webinar, and many thanks to the presenters. And on that note, I wish you a very good afternoon.